Before we dive in, a quick and important disclaimer. I am not a licensed financial advisor or insurance agent. This video is for educational and entertainment purposes only, based on publicly available information and my own analysis. The information provided here is not a substitute for professional advice. Insurance rates, policies, and availability vary significantly by state and individual circumstances. You should always consult with a qualified professional to determine what is right for your specific needs. Alright, let's talk about that sinking feeling. You know the one. The crunch of metal, the hiss of a deflating tire. Your heart pounds in your chest. It's a fender bender. No one's hurt, thank God, but your day, your week is ruined. And now comes the part that, for many people, is even worse than the accident itself. Calling your insurance company. You brace yourself for an endless phone tree. For hold music that will haunt your dreams. For being transferred to 5 different departments only to have to explain the story over and over and over again. You feel like just another policy number in a massive, faceless system. A system designed to collect your premiums with a smile and pay out claims with a magnifying glass and a whole lot of red tape. We've been trained to accept this as normal. We see the commercials with the funny geckos, the quirky spokespeople, and the catchy jingles, and we sign up with the giants, the progressives, the GEICOs, the State Farms, because that's just what you do. But what if there was another way? What if there was a company that has been quietly, consistently dominating customer satisfaction awards for over a decade, yet you've probably never seen a single one of their commercials during the Super Bowl? There is. And its name is Amica Mutual Insurance. For 12 years in a row, J.D. Power, the gold standard for this stuff, has ranked Amica #1 in the nation for customer satisfaction in auto claims. Not second place. Not top 5. Number 1. For over a decade. That isn't a fluke. That's a pattern. That's a track record that should make every single driver in America stop and ask a very simple question. Who are these guys? And if they're so great, why aren't they shouting it from the rooftops? That is exactly why we're here today. This isn't going to be a sales pitch. This is an honest, no-holds-barred investigation into one of the most respected and yet least understood insurance companies in the United States. We are going to peel back the layers and figure out if this legendary customer service is real, who it's for, how much it actually costs, and whether Amica is the right choice for you. We're going to look at the good, the bad, and the fine print that can make or break your experience when you need them most. By the end of this, you will know more about Amica than 99% of drivers on the road, and you'll be able to make a truly informed decision about where you send your hard-earned money every month. Because let's be real, car insurance is one of the most frustrating things we have to buy. It's a product you pay for every single month, hoping you never ever have to use it. But on that one terrible day when you do, its quality or lack thereof can completely alter the course of your life. It's the difference between a stressful inconvenience and a full-blown financial catastrophe. Choosing the right company isn't just about saving $50 a year. It's about buying peace of mind. It's about knowing that someone has your back. So where do we start? To understand Amica, you can't just look at their policies. You have to look at their DNA. You have to go back to 1907. Yeah, you heard that right. This company is older than the Oreo cookie, older than the state of Arizona. It was founded in Rhode Island by a man named A.T.V. Neuron, but it wasn't founded on a normal business principle. It wasn't created to make a handful of investors rich. It was founded as a mutual insurance company. Now that word mutual is the most important word you will hear today. It's the secret key that unlocks everything about how Amica operates. Unlike a stock company like GEICO, which is owned by Berkshire Hathaway, or Progressive, which is traded on the stock market, a mutual insurance company is owned by its policyholders. Let that sink in for a second. If you have a policy with Amica, you are, in a very real sense, a part owner of the company. There are no outside shareholders demanding bigger profits. No Wall Street analysts pressuring them to cut costs on claims to boost the stock price for the next quarter. Their only responsibility is to you, the policyholder. This fundamentally changes the entire business model. Instead of profits being paid out to investors, they are either reinvested back into the company to improve service and stability, or they are returned to the policyholders in the form of dividends. Yes, dividends. As in, they can literally send you a check at the end of the year just for being a customer. It's not a gimmick and it's not guaranteed every year. But for decades, Amica has a consistent track record of paying out dividends, often up to 20% of your annual premium. Think about that. Your current insurance company takes your money, Amica takes your money, and if they have a good year and manage their business well, they give some of it back. It's a completely different philosophy. Their incentive isn't to squeeze every last penny out of you. Their incentive is to serve you well so you stick around because you are the owner. This is why you don't see them spending billions on advertising. They grow primarily through word of mouth through their reputation, because every dollar they spend on a talking lizard is a dollar they can't return to you in a dividend check or use to hire a better claims adjuster. This policyholder-owned structure is the foundation for that #1 JD Power ranking. It creates a culture focused on long-term relationships, not short-term transactions. When you call them, the person on the other end of the line is, in theory, working for you. Their goal is to resolve your issue and keep you happy as a part owner, not to rush you off the phone to meet a call time quota. But does this beautiful theory actually hold up in the real world? Is it all just clever marketing? Or is there real substance behind the mutual advantage? Because a great philosophy doesn't mean anything if the coverage is bad or the price is astronomical. And that's where our investigation gets interesting. Because Amica is not for everyone. Their approach leads to a very specific type of customer experience, with distinct advantages and some very real disadvantages that you need to be aware of. They have a reputation for being selective, for preferring certain types of drivers, and their pricing can be a bit of a roller coaster depending on who you are and where you live. So now that we understand the why behind Amica, we need to dig into the what. What kind of coverage do they actually offer? Is it just the bare bones basics? Or do they have the premium options that can protect you from the truly weird and financially devastating things that can happen on the road? We're going to break down their policies piece by piece from liability to collision, and we're going to shine a spotlight on some of their unique offerings like their Platinum Choice Auto package, which includes things like full glass coverage with no deductible, and even identity theft protection, things you just don't see from most standard carriers. The story of Amica is compelling, but the details are what matter. And the details are what we're diving into next. So let's pull back the curtain on what you're actually buying when you get a policy from Amica. We'll start with the basics, the absolute non-negotiables of any auto insurance policy, and then we'll get into the really interesting stuff, the options that set Amica apart. First up, you have your holy trinity of standard coverage: liability, collision, and comprehensive. Think of these as the foundation of your house. Without them, everything else is pointless. Liability is the big one. It's what's legally required in almost every state. This isn't for you. It's for everyone else. If you cause an accident, liability coverage pays for the other person's car repairs and their medical bills. When you see numbers like 50/100/50, that's your liability limit in thousands of dollars. $50,000 for one person's injuries, $100,000 total for everyone's injuries in the car you hit, and $50,000 for property damage. Here's the first honest truth. The state minimum is almost never enough. Imagine you glance at your phone for 1 second and rear-end a brand new Mercedes. The state minimum might not even cover the bumper. You'd be on the hook for the rest, potentially tens of thousands of dollars out of your own pocket. Amica, like most reputable insurers, will encourage you to get higher limits, and frankly, you should listen. It's one of the cheapest ways to buy real peace of mind. Next is collision. This one's for you. It pays to repair or replace your own car if you're in an accident you caused. Backing into a pole in a parking lot, misjudging a turn, hitting another car, that's all collision. You choose a deductible, say $500 or $1,000. That's the amount you pay out of pocket before the insurance kicks in. A higher deductible means a lower premium, but it also means more cash you need to have ready if something goes wrong. Then there's comprehensive. This is for almost everything else that can happen to your car when you're not driving it. A tree branch falls on it during a storm. A deer decides to use your front grille as a trampoline. Your car gets stolen. Hail damage. Vandalism. All of that is comprehensive coverage. Like collision, you pick a deductible. It's the act of God or bad luck coverage. Okay, so that's the standard stuff. Every major carrier offers this. It's the price of entry. But this isn't where the Amica story gets interesting. The real difference, the reason people become lifelong Amica customers, is in the details and the optional add-ons. And the crown jewel of their offerings is a package they call Platinum Choice Auto. Think of this as the all-in button. It's a bundle of their best features, and if you're eligible for it, it can be a game changer. Let's break down exactly what's inside. First, and this is a big one for anyone who's ever dealt with a cracked windshield, is full glass coverage. With a standard comprehensive policy, if a rock flies up and cracks your windshield, you have to pay your deductible. If your deductible is $500 and the windshield costs $700 to replace, you pay the $500, and insurance pays $200. With Amica's full glass coverage add-on, your deductible is zero. Chip, crack, full-on spiderweb, it doesn't matter. They fix it or replace it, and you pay nothing out of pocket. In an age where windshields have cameras, sensors, and heating elements, they can easily cost over $1,000 to replace. This single feature can pay for itself very quickly. Next in the Platinum package is something you would never expect from a car insurance company: identity fraud monitoring. This is a perfect example of Amica's unique, holistic approach. They're not just insuring your car, they're ensuring your financial well-being. They partner with a credit monitoring service to watch for suspicious activity on your accounts, scan the dark web for your information, and provide you with specialists to help you restore your identity if it's ever stolen. In a world of constant data breaches, having this quietly bundled into your car insurance is a powerful and frankly very modern perk. The package also includes prestige rental coverage. Most standard rental reimbursement is pretty basic. They might give you $30 a day for a rental car while yours is in the shop. Try renting anything larger than a shoebox for $30 a day. It's not happening. The prestige option bumps this up significantly, often to $5,000 total with no per-day limit. So if you drive a big SUV or a truck, you can actually rent a comparable vehicle instead of being forced to cram your family into a tiny compact car for 2 weeks. It's a small detail that makes a huge difference in the real-world experience of a claim. But perhaps the most valuable piece of the Platinum Choice puzzle is new car replacement. This is absolutely critical for anyone with a brand new car. We all know that a new car loses thousands of dollars in value the second you drive it off the lot. If you buy a $40,000 car and total it 6 months later, a standard policy will only pay you its actual cash value, what it's worth now, which might only be $34,000. You're left with a $6,000 gap and you still have to buy a new car. With Amica's new car replacement, if you total your car within the first year, and it has less than 15,000 miles, they don't give you what it's worth. They give you the money for a brand new one. Same make, same model. This is a massive benefit that protects you from depreciation and can literally save you thousands of dollars when you need it most. The Platinum package also bundles in a few other things like waiving your deductible if you're in an accident with another Amica customer, which is a nice little touch. Now, you don't have to get the Platinum package to access great coverage. Amica lets you pick and choose many of these things a la carte. You can add roadside assistance, which covers you for towing, flat tires, dead batteries, and running out of gas. It's very similar to what you'd get from AAA, but often more convenient because it's all on one bill. Another critical one, and please pay attention to this, is uninsured and underinsured motorist coverage. This is one of the most important coverages you can buy, yet so many people skip it to save a few bucks a month. Let's paint a picture. You're sitting at a red light, and someone slams into you from behind. They have no insurance, or they have the bare minimum state-required liability coverage. Your car is totaled, and you have serious medical bills. Their pathetic insurance policy runs out before it even covers the cost of your ambulance ride. What do? Without uninsured motorist coverage, you sue them personally. Good luck with that. You'll likely never see a dime. But if you have this coverage, your own insurance company, Amica, steps in and acts as the insurance for the person who hit you. They pay for your car, your medical bills, and even your lost wages, up to the limits you selected. It protects you from the irresponsible decisions of other drivers. It is not an exaggeration to say this coverage can save you from financial ruin. And that brings us to the last major piece of the puzzle: medical payments or MedPay. This is another coverage that's for you and your passengers. It pays for medical expenses from an accident, no matter who was at fault. If you have great health insurance, you might think you don't need it. But MedPay can cover things your health insurance won't, like deductibles, co-pays, and even services like dental or chiropractic care resulting from the accident. It's typically not very expensive to add, and it provides an immediate source of cash for medical bills without having to wait for a fault-based claim to be settled. So you have this incredible menu of options, from the basic, legally required foundation to a full-blown platinum-level safety net that covers your car, your finances, and even your identity. It's comprehensive, it's thoughtful, and it's clearly designed around the real-life problems people face. But the million-dollar question, the one that's on everyone's mind, remains: what does all of this actually cost? And more importantly, how can you make it cheaper? That's where we get into the real numbers, the discounts, the pricing secrets, and Amica's legendary dividend program. You're not going to want to miss that. Alright, let's pull back the curtain on the numbers, because a great reputation is worthless if you can't afford the policy. The first thing you need to understand about Amica's pricing is that they aren't trying to be the cheapest option on the market. They're not GEICO or Progressive, spending billions on ads to hook you with a low introductory rate that mysteriously creeps up every 6 months. Amica is playing a different game entirely. As a mutual insurance company, they're owned by their policyholders, not by Wall Street investors. This fundamentally changes their goal. Instead of squeezing every last penny of profit for shareholders, their objective is to collect enough in premiums to cover claims and operating costs, and then return the rest to you, the owner. That's the core philosophy, and it bleeds into every aspect of their pricing and discounts. So, how do we make that philosophy work for our wallet? We start with the discounts, and I'm not just going to list them, I'm going to show you how to stack them like a pro. The heavyweight champion of all discounts at Amica and nearly everywhere else is the multi-policy or bundling discount. You've heard it a million times. Bundle your auto and home or auto and renters. With Amica, this isn't just a small fry discount. It can be up to 30% off. Think about that. If your auto premium is $2,000 a year, that's $600 back in your pocket, just for having them cover your apartment or house, which you needed to do anyway. The key here is to get a quote for both at the same time. Don't just add a car to an existing home policy later. Get the full bundled quote from the start to see the maximum impact. It's the single biggest lever you can pull. Next up is the loyalty discount. This one is interesting. Amica rewards you for sticking with them, which is pretty standard. But they also offer a discount for having been with your previous insurance company for a certain number of years. It's a bit of a secret handshake. They're essentially saying, we see you're a loyal, stable customer, and we want you. So if you've been with your current carrier for 5 years or more, make sure you mention that. It tells their algorithm that you're not a high-risk person who jumps from company to company, and they'll often reward you for it before you've even been with them for a single day. Now for the driver-specific discounts. The good student discount is a big one for families. If you have a young driver on your policy, this is non-negotiable. Typically, they need to maintain AB average or be in the top 20% of their class. It can save you up to 15%, which on a teen driver's premium is a massive amount of money. You'll need to send in a report card or transcript, but the 5 minutes it takes to do that can save you hundreds of dollars a year. Paired with this is the student away at school discount. If your kid is in college over 100 miles away and didn't take a car with them, you can get a huge discount. They're still covered when they come home for breaks, but Amica recognizes they aren't a daily risk anymore. Then you have your defensive driving and driver training discounts. These are easy money. For younger drivers, completing an accredited driver training program can knock a good percentage off. For older drivers, taking an approved defensive driving course every few years can do the same. These courses are often online now, you can do them in a weekend, and the certificate you get can lead to years of savings that far outweigh the cost of the course itself. But let's get into the less obvious ones, the discounts people leave on the table. The anti-theft device discount. If your car has a factory-installed alarm or an immobilizer that prevents it from being hot-wired, you qualify. Most cars made in the last decade have this. But sometimes you have to explicitly tell the insurance company it's there. Same goes for passive restraints, that's just a fancy term for automatic seat belts and airbags. Again, almost every car has them, but you want to make sure they're noted on your policy. Electronic stability control, or ESC, is another one. It's a feature that helps prevent rollovers and skids. If your car is from 2012 or newer, it's legally required to have it. It's a small discount, maybe 1 or 2%, but why wouldn't you take it? These little things add up. You stack 3 or 4 of them together, and you're suddenly saving an extra 5 to 10%. Okay, so you've stacked your discounts. You've bundled your policies. You've taken your defensive driving course. Now we get to the part that makes Amica truly unique. The dividend policy. This is the legendary feature you hear people talk about, and it's the purest expression of their owned by the policyholder's structure. Here's how it works. You can choose to buy a traditional policy, or you can opt into their dividend policy. The dividend policy will have a slightly higher premium upfront, maybe 15 to 20% higher. And I know what you're thinking. Why on earth would I pay more? Because at the end of the year, if Amica has a good year, meaning they took in more in premiums than they paid out in claims and expenses, they share that surplus with their dividend policyholders. They literally mail you a check. For the last 20 years, that dividend has typically been 20% of the annual premium. Let me repeat that. A 20% refund. So let's do the math. Let's say a traditional policy costs you $1,500 a year. The dividend policy might cost you $1,800. You're paying an extra $300 upfront. But at the end of the year, if they declare a 20% dividend, you get a check for 20% of that $1,800 premium. That's a check for $360. So you paid $300 extra, but you got $360 back. You came out $60 ahead, effectively lowering your real cost to $1,440. Now here's the honest part. That dividend is not guaranteed. If Amica has a catastrophic year, a string of major hurricanes, for example, and their claims payouts are massive, they might not issue a dividend. It's rare, but it has happened. So you are taking a slight gamble. You're betting that Amica will continue its long, stable history of profitability. For most of its history, that's been a very, very good bet. For over a century, they have consistently paid out dividends. It's a core part of their identity. But you have to go in with your eyes open, understanding that the slightly higher premium is the cost of entry, and the dividend is the potential and likely reward. So, when you're getting a quote, you need to ask for both prices, the traditional and the dividend option. Look at the difference in cost, and then consider the historical 20% return. For many people, the math makes perfect sense. It's a forced savings plan with a probable return that beats the initial investment. Finally, let's talk about the factors that secretly jack up your price. The things beyond the car you drive. Your insurance score, which is partly based on your credit score, is a huge one in most states. Insurers have found a direct correlation between financial responsibility and driving responsibility. It's controversial, but it's a reality of the industry. Having a good credit history can save you hundreds, even thousands, on your premium with a company like Amica, which puts a heavy emphasis on attracting stable, responsible customers. Another secret factor is continuous coverage. If you have even a one-week lapse in your auto insurance history, you are seen as a much higher risk. It's critical to maintain continuous insurance, even if you're between cars. Get a non-owner policy if you have to. That history of continuous coverage unlocks a preferred pricing tier that you will never get otherwise. So when you put it all together, the multi-policy, the loyalty, the driver safety, and the vehicle feature discounts, all stacked on top of a potential 20% dividend check, you can see how the initial sticker price of an Amica quote isn't the real story. The real cost is often significantly lower for the type of customer they're looking for. Stable, responsible, and loyal. But a low price and a nice dividend check mean absolutely nothing if they ghost you when you actually need them. When your car is wrecked on the side of the road, when you're stressed and vulnerable, how does Amica really perform? We dug into the real-world claims data, the customer service horror stories, and the glowing reviews to find out what happens when you have to make that call. And what we found might surprise you. Let's start with the elephant in the room, J.D. Power. For 16 years running, they've ranked Amica #1 in the nation for customer satisfaction in auto claims. 16 years. That's not a fluke. That's not a lucky streak. That's a dynasty. When you see a rating like that, you imagine a perfect, seamless process. You picture a world where, after the shock of a collision, a calm, reassuring voice on the other end of the phone says, "Don't worry, we've got this." And for a huge number of Amica customers, that is precisely what happens. We spoke with a policyholder from North Carolina. Let's call him David. He was sideswiped on his way to work, a classic case of someone merging without looking. The other driver was apologetic, fault was clear, but David's car, his pride and joy, had a massive gash down the passenger side. He was dreading the phone call. He'd heard horror stories from friends with other insurance companies, endless phone trees, adjusters who treated them like criminals, and lowball repair estimates. He called Amica's 24/7 claims line from the side of the road. Within minutes, he was speaking to a real person. Not an automated system, a human being who asked first if he was okay. By the time the tow truck arrived, his claim was filed, a rental car was arranged to be delivered to his home the next morning, and he had a direct line to his assigned claims adjuster. He chose his own body shop, a place he trusted. The adjuster coordinated directly with the shop, approved the estimate without haggling, and the payment was issued via direct deposit before the repairs were even finished. From the crash to getting his keys back, the process took 9 days. David told us. It was so smooth it was almost unsettling. I kept waiting for the catch, for the hidden fee, for the gotcha moment. It never came. This is the Amica that earns those J.D. Power awards. This is the brand promise in action. It's a well-oiled machine designed for the most common types of claims, the fender benders, the parking lot scrapes, the clear-cut liability cases. In these scenarios, their process is a masterclass in efficiency and empathy. They empower their representatives, they trust their customers, and they focus on getting you back on the road with minimal friction. They understand that a simple, positive claims experience is the single most powerful marketing tool they have. It turns a customer into a lifelong advocate. But what happens when the gears of that machine grind against something more complex? What happens when fault isn't clear, when injuries are involved, or when the damage is catastrophic? This is where the pristine image of Amica begins to show some cracks. We dove into the databases of the Better Business Bureau, scoured legal forums, and read through hundreds of one-star reviews to find the counter-narrative. And a pattern emerged. The stories often start the same way. A serious accident, complicated situation, maybe a multi-car pileup on a snowy highway, or a collision with an uninsured driver who gives a fake name and disappears. In these moments of high stress and high stakes, some customers report that the warm, empathetic Amica they were sold disappears, replaced by a cold, bureaucratic entity. The communication, once so crisp and proactive, becomes slow and opaque. Calls go unreturned. Emails sit unanswered for days, then weeks. The dedicated adjuster you were assigned suddenly seems to be handling 400 other cases. One story from a driver in Florida was particularly jarring. Her car was totaled in a hit and run. She had uninsured motorist coverage, exactly for this scenario. But the nightmare was just beginning. The initial settlement offer for her vehicle was thousands less than the Kelley Blue Book value. When she contested it, presenting comparable vehicle listings from her area, she was met with what she described as a stone wall. The process dragged on for months. She was paying out of pocket for a rental car because her policy limit had been exhausted. Every phone call felt like a battle, forcing her to re-explain her situation to a different person each time. She felt less like a valued customer and more like an adversary. Eventually, after threatening to hire a lawyer and file a complaint with the state insurance commissioner, a revised offer materialized that was much closer to the car's actual value. She accepted, but the experience left her emotionally and financially drained. She said, "They won. They wore me down until I just didn't have any fight left." So how can both of these realities exist? How can one company be a 16-time JD Power champion and, for some, a source of immense frustration? The answer lies in the nuance of the insurance business itself. First, there's the distinction between an in-house adjuster and an independent, third-party adjuster. Amica, like nearly all insurers, uses a network of independent adjusters to handle claims in areas where they don't have a large physical presence, or during catastrophic events like a hurricane or major hailstorm when claim volume skyrockets. These independent adjusters work for multiple insurance companies. Their loyalty isn't exclusively to Amica, and their training, workload, and customer service philosophy can vary wildly. Many of the most negative reviews we found specifically mentioned issues stemming from communication breakdowns with these third-party contractors, creating a disconnect between the customer and the mothership at Amica. You think you're dealing with Amica, but you're actually dealing with a contractor whose incentives might be very different. Second is the complexity of the claim itself. A simple rear-ending is an administrative task. A complex liability dispute involving multiple parties and serious medical claims is a legal battle. When a claim transitions from a customer service issue to a legal and financial risk management issue, the posture of the company can change. The goal shifts from get the customer back on the road to minimize the company's financial exposure. This is true for every insurance company, but it can be particularly jarring for Amica customers who are accustomed to that high-touch, white-glove service. The moment lawyers get involved, or when a claim value crosses a certain internal threshold, the process can become far more adversarial. And finally, there's the simple human element. Your experience often comes down to the individual adjuster assigned to your case. Are they experienced or brand new? Are they managing a reasonable caseload, or are they completely overwhelmed? One great adjuster can make a nightmare scenario manageable. One bad, overworked, or poorly trained adjuster can turn a simple fender bender into a month-long ordeal. So what's the final verdict on Amica's claims process? It is, by all objective measures, one of the best in the industry. The data overwhelmingly supports this. For the vast majority of drivers who experience common, straightforward accidents, the Amica experience is likely to be exactly as advertised: fast, fair, and compassionate. However, it is not a perfect system. The risk of a negative experience rises in direct proportion to the complexity of your claim, and the potential involvement of third-party adjusters. The armor has a few chinks in it, and it's critical for potential customers to know where they are. This brings us to the ultimate question. This level of service, even with its occasional flaws, has to come at a cost. You don't get a premium experience for a bargain bin price, right? Or do you? Is Amica the expensive, top-shelf option reserved only for those with perfect driving records and deep pockets? Or is it more accessible than its reputation suggests? To find out, we have to pull back the curtain on Amica's pricing, its legendary dividend program, and the surprising discounts that most people don't even know exist. How much does it really cost to be an Amica customer? The answer is coming up next. So, you're standing at the digital crossroads, a quote from Amica in one hand and a quote from a competitor in the other. And more often than not, the Amica number looks bigger. Sometimes a little, sometimes a lot. This is the moment where most people close the browser tab on Amica. They see that higher upfront price and think, nope, too expensive. And frankly, if that's all you look at, you're not wrong. But you're also missing the entire story. You're looking at the sticker price, not the real cost of ownership. And with Amica, those two numbers can be worlds apart. To understand why, you first have to understand what Amica is. Unlike GEICO, which is owned by Berkshire Hathaway, or Progressive, which is a publicly traded company with shareholders to please, Amica is a mutual insurance company. That's not just some boring corporate trivia. It is the absolute key to everything. A mutual company is owned by its policyholders. That's you. You're not just a customer. You are, in a very real sense, a part owner of the company. This means there are no Wall Street investors demanding bigger and bigger profits every quarter. The company's primary financial obligation is to you, the policyholder. And this is where the magic happens, in the form of their legendary dividend policy. Let this sink in. For over 100 years, Amica has consistently returned a portion of its profits back to its auto policyholders. This isn't a gimmick. It's not a cashback credit card reward. It's a direct return of your own money. When the company has a good year, meaning they took in more in premiums than they paid out in claims and expenses, they don't just pocket the difference to enrich shareholders. They turn around and mail a check back to their owners. To you. How much are we talking about? Historically, this dividend has often been as high as 20% of your annual premium. Let's stop and put that into perspective with real numbers. Say your annual auto premium is $2,000. A 20% dividend means at the end of your policy term, you get a check in the mail for $400. Cold hard cash. Your actual cost for that year's insurance wasn't $2,000. It was $1,600. Now, let's go back to that initial quote comparison. Maybe GEICO quoted you $1,800. On day one, GEICO looks like the cheaper option by $200. But after you get that $400 dividend check from Amica, you've actually saved $200 by going with a policy that looked more expensive. This is the fundamental misunderstanding most people have about Amica's pricing. They compare the pre-dividend premium with everyone else's final price, and it's an apples to oranges comparison. Now, for the sake of honesty, we have to be crystal clear. This dividend is not guaranteed. Amica's own website and documents will tell you this repeatedly. It's dependent on the company's financial performance. If there's a catastrophic year with massive storms across the country or a huge spike in accidents, the company might have a less profitable year, and the dividend could be smaller. Could, in theory, be zero. But the track record speaks for itself. For generations, this has been a core part of their business model, a promise they have consistently kept. It's the financial engine that makes their entire value proposition work. But the dividend is only half of the pricing puzzle. The other half is getting that initial premium, the number the dividend is based on, as low as humanly possible. And Amica has a deep roster of discounts, some of which are pretty surprising. Let's start with the basics, the ones you'd expect. You've got your multi-line discount, which is a big one. If you bundle your auto insurance with a home, renter's or condo policy, you'll see a significant drop in your premium. There's the multi-car discount, the good student discount for young drivers who maintain a B average, and discounts for taking approved defensive driving courses. Standard stuff. They also have discounts for the features on your car. Anti-theft systems like alarms or tracking devices will knock a bit off. Passive restraint systems like airbags and automatic seatbelts do too. And then there are the payment-related discounts. Pay your entire premium up front for the year, and you'll get a discount. Sign up for automatic payments from your bank account, you get a discount. Go paperless and receive all your documents online? You guessed it, another discount. This is what we call stacking. Each little discount chips away at that initial premium. A few percent here, a few percent there. It all adds up. But now let's talk about the discounts that most people don't even know to ask for. The ones that really show what kind of customer Amica is looking for. First, there's the loyalty discount. The longer you stay with Amica, the more you save. This is the polar opposite of some companies that practice price optimization, a sneaky tactic where they gradually raise rates on loyal customers who are less likely to shop around. Amica does the reverse. They reward you for sticking with them, with your discount growing over time. Second, and this is one of my favorites, is the legacy discount. If you are under 30 years old and your parents have been Amica auto policyholders for at least 5 years, you get a discount. Think about that. They are rewarding generational loyalty. It sends a message that they aren't just looking for a customer for 1 year. They're looking to build a relationship that can span a family's lifetime. Third, the claim-free discount. This is different from just being a safe driver. If you go a certain number of years, typically 3, without filing a claim, you get a specific additional discount on your policy. They are directly rewarding you for being a low-risk, low-cost customer. So let's put this all together in a real-world scenario. Let's imagine a driver named David. He's 40, has a clean record, and wants to insure his car and his home. He gets a quote from a major competitor for a combined premium of $3,000 per year. Then he gets a quote from Amica, and it comes in at $3,300. Initially, it looks like a no-brainer. Save $300 and go with the competitor. But David does his homework. He qualifies for Amica's multi-line discount. He agrees to pay his premium in full. He signs up for paperless billing. And it turns out his parents have been with Amica for 20 years, so he qualifies for the legacy discount. After stacking all of these, his initial premium of $3,300 drops down to $2,800. He is now already saving $200 a year compared to the other company before the dividend. Then, at the end of the year, Amica has another solid financial performance and declares a 20% dividend. David gets a check in the mail for 20% of his $2,800 premium. That's a check for $560. His real cost for the year wasn't $3,300. It wasn't even $2,800. It was $2,240. Compared to the competitor's quote of $3,000, he has saved $760. This is the Amica pricing formula. A slightly higher starting point, whittled down by a deep stack of meaningful discounts, and then a massive reduction on the back end through the dividend payment. It's a completely different way of looking at the cost of insurance. It's a system designed to attract and retain responsible, loyal customers, and then share the financial rewards of that select group with the members themselves. The price, when you look at it this way, is incredibly compelling. But we all know that the cheapest insurance is worthless if the company vanishes when you need them most. A low price is fantastic, but the true test, the moment of truth for any insurance company, comes when you hear the crunch of metal and the shatter of glass. How does Amica's legendary service actually perform in the chaos of a real-life claim? What really happens when you make that dreaded phone call from the side of the road? That's where the rubber truly meets the road, and it's exactly what we need to break down next. So you're standing on the shoulder of a highway, the smell of burnt rubber and coolant in the air. Your heart is pounding, adrenaline is coursing through your veins, and your meticulously maintained car now has a new unplanned crumple zone. This is the moment a brand's promise is either honored or broken. For Amica, a company that has built its entire identity on the foundation of superior customer service, this is the ultimate test. Let's start with that first call. The first notice of loss. You pull up the Amica app on your phone, or you dial the number on your insurance card. What happens next is critically important. With many budget insurers, this is where the nightmare begins. Endless phone trees, hold music that could be classified as a form of torture, and finally, a call center agent who sounds like they're reading from a script in a different time zone and couldn't care less about your crumpled fender. Amica's approach is fundamentally different, and this is where you first feel the impact of their reputation. Overwhelmingly, customers report that the person who answers the phone is calm, empathetic, and most importantly, located right here in the United States. They don't just ask for your policy number. They ask if you're okay. They ask if everyone is safe. It's a human-to-human interaction, not a human-to-database transaction. They guide you through the immediate next steps. What information to get from the other driver, the importance of taking photos, and whether you need a tow. The goal of that first call isn't just to log a claim. It's to de-escalate a crisis. This initial experience is a massive point in Amica's favor. While other companies are optimizing for call time efficiency, Amica seems to be optimizing for your sanity. Once that initial report is filed, the baton is passed to a claims adjuster. And here we encounter another major fork in the road that separates insurers. Many large companies will assign your claim to a pool. You might talk to Sarah on Monday, David on Tuesday, and if you call back on Thursday, you're starting from scratch with Maria. It's inefficient and deeply frustrating. You feel like a case number, not a person. Amica, in most cases, assigns a dedicated claims representative to you for the life of your claim. This is your single point of contact. This one person is responsible for your case from start to finish. Think about the power of that. You have a name. You have a direct line and an email address. When you have a question, you're not re-explaining the entire accident to a stranger. You're talking to someone who already knows the details. This single structural difference in their claims process eliminates one of the biggest sources of anxiety and frustration for customers. It fosters a sense of accountability. Your adjuster knows they're going to be talking to you again, which incentivizes them to be responsive and clear. Now let's talk about the car itself. The damage. This is where things can get complicated. Amica, like most major insurers, has a network of pre-approved, certified repair facilities. They call it their direct repair program. If you choose to use one of these shops, the process is designed to be incredibly smooth. You drop off your car, the shop communicates directly with your Amica adjuster. They agree on the scope of the repair and the cost, and the work gets done. Amica guarantees the workmanship of these repairs for as long as you own the vehicle. For a lot of people, this is the path of least resistance. It's fast, it's easy, and you don't have to play middleman between the body shop and the insurance company. The rental car is often waiting for you right at the shop. It's a seamless white glove experience. But here's the critical question you need to ask. What if you have a mechanic you've trusted for 20 years? What if you want to take your specific make of car to a dealership or a specialized body shop that isn't in Amica's network? This is a huge point of contention with many insurers. They can make it difficult, sometimes pressuring you to use their preferred vendor, slowing down approvals, or questioning every line item on the estimate from your chosen shop. This is another area where Amica tends to shine, though it's not without its nuances. Their official policy and the experience reported by most customers is that you absolutely have the right to choose your own repair facility. They will send an appraiser out to inspect the vehicle at your chosen shop, or they'll work off the estimate your mechanic provides. However, there can be a difference in the labor rate. Amica will pay the prevailing competitive rate for labor in your area, which is based on what the shops in their network charge. If your high-end, specialized dealership charges a significantly higher hourly rate, you might be responsible for paying the difference out of pocket. This is not an Amica-specific issue. It's standard practice across the industry. But Amica is generally seen as being fair and reasonable in these negotiations, working with non-network shops to reach an agreement rather than drawing a hard line in the sand. The key takeaway is, while their network is convenient, they don't penalize you for wanting to use your own trusted professional. Now for the most feared scenario, the total loss. Your car is declared a write-off. The insurance company is going to cut you a check for its value. This is the moment of truth. The number on that check determines your ability to get back on the road in a comparable vehicle. This is where so many insurance companies earn their bad reputations, using opaque valuation algorithms to lowball customers, hoping they'll just accept the first offer out of desperation. Amica's process for determining the actual cash value, or ACV, is generally regarded as one of the fairer ones in the business. They use third-party valuation services, just like everyone else, but they tend to be more transparent and willing to negotiate. They look at comparable vehicles that have recently sold in your local market. The initial offer you receive is just that, an offer. If you believe it's too low, you have the right to contest it. This is where you do your homework. Find your own comparable listings, same make, model, year, similar mileage, and similar options, from local dealerships and private sellers. Present this evidence to your adjuster. The overwhelming feedback from Amica customers in this situation is that their adjusters listen. They're willing to review the data you provide. If you can show them legitimate, local market data that proves your car was worth more than their initial offer, they will often adjust the settlement. They're not looking for a fight, they're looking to close the claim fairly. It's part of their service-oriented DNA. They know that a bitter fight over $1,000 on a total loss settlement will lose them a customer, and that customer's family and friends for life. They're playing the long game, and it shows in how they handle these sensitive negotiations. So when we pull back and look at the entire claims process, from the first empathetic phone call, to the dedicated adjuster, to the flexibility in repairs, and the fairness in settlements, it becomes clear why Amica's reputation is so stellar. They have systematically identified the most stressful, frustrating parts of making a claim and engineered a process designed to minimize that pain. It's not about flashy tech or gimmicky apps. It's about competent, empowered people treating you with respect during a difficult time. But this premium service and sterling reputation must come at a cost, right? There's no such thing as a free lunch, and there's certainly no such thing as cheap, top-tier insurance. So, how much is this peace of mind actually going to set you back? What does an Amica policy really cost compared to its competitors, and who is it the best financial fit for? To answer that, we need to dive deep into the numbers, the discounts, and the unique dividend policy that changes the entire equation. Let's start with the elephant in the room: the price tag. The word on the street, the whisper in online forums, is that Amica is expensive. And if you just go online and get a raw, no-context quote, that can absolutely be true. Their initial number might come in higher than the GEICOs and Progressives of the world. And for a lot of people, that's where the story ends. They see a bigger number, they close the browser, and they move on. But that's like judging a 5-course meal based on the price of the appetizer. You're missing the main course, the dessert, and the thing that makes it all worthwhile. Amica isn't playing the same game as the companies that spend billions on GEICO and Emu commercials. They aren't in a race to the bottom for the absolute cheapest bare-bones policy for every single person with a driver's license. Their strategy is fundamentally different. They are selectively targeting a lower-risk pool of drivers. Think of it like an exclusive club. If you have a history of accidents, a stack of speeding tickets, or a DUI on your record, you're probably not getting past the velvet rope. And if you do, the cover charge will be steep. They're not trying to be the cheapest option for high-risk drivers. In fact, they're actively trying not to be. Their entire business model is built on insuring people who are less likely to file claims in the first place. So who is Amica for? It's for the driver with a clean record. It's for the established homeowner who wants to bundle policies. It's for the person who sees insurance not as a commodity to be bought for the lowest price, but as a crucial financial shield provided by a stable, reliable partner. If that's you, then the initial sticker price is just the starting point of the negotiation. The real magic happens when we start talking about discounts. Now, every insurance company has discounts. It's how they tailor their pricing. Amica has all the ones you'd expect. The multi-car discount if you have more than one vehicle on your policy. The multi-policy or bundling discount, which is a big one if you combine your auto with a home, condo, or renter's policy. They have the good student discount for young drivers hitting the books, and discounts for taking approved defensive driving courses. These are standard. They're the table stakes. But Amica has a few that really lean into their philosophy. First, there's the loyalty discount. This is huge. Amica rewards you for sticking around. After just 2 years, you start earning a discount that continues to grow over time. This runs completely counter to the modern insurance hopping strategy, where customers are forced to switch companies every year or two because their loyal provider keeps jacking up the rates. Amica wants a long-term relationship, and they're willing to pay you to stay committed. Then there's the claim-free discount. This is a direct reward for being the kind of customer they want. Go a certain number of years without filing a claim, and they'll cut your premium. They are literally placing a bet that you're a safe driver, and when you prove them right, you share in the winnings. They also have practical discounts like paying your premium in full upfront, which can save you a noticeable chunk of cash. Or the e-discount, a simple reward for going paperless and managing your account online. And of course, they reward you for having a safer car. Discounts for anti-theft systems, airbags, electronic stability control, and other modern safety features. When you start stacking these discounts, bundling your home and auto, staying with them for years, maintaining a clean record, and paying in full, that initial sticker price can start to look dramatically different. Suddenly, Amica might not just be competitive. For the right person, it can actually be one of the more affordable options. But even that isn't the full story. We haven't even gotten to the game changer. The one thing that completely separates Amica from 99% of its competitors and transforms the entire cost equation: the dividend policy. This is the secret weapon. To understand it, you first have to understand what Amica is. Amica is a mutual insurance company. That might sound like boring industry jargon, but it is the most important detail in this entire video. A publicly traded company like Progressive or Allstate is owned by stockholders. Their primary legal obligation is to make as much money as possible for those Wall Street investors. When they have a profitable year, that money goes to shareholders in the form of stock buybacks and dividends. You, the customer, are just the source of that revenue. A mutual insurance company is different. It is owned by its policyholders. Let me say that again. If you have a policy with Amica, you are a part owner of the company. There are no outside stockholders to please. The company exists for the sole benefit of its members, the people it insures. So what does this mean for your wallet? At the end of each year, Amica does its accounting. They take all the premiums they collected, and they subtract all the claims they paid out plus their operating expenses. If they've done their job right, by ensuring safe drivers and managing their business well, there's money left over. That money is profit. And instead of sending that profit to Wall Street, they send a portion of it back to you, their owners. This payment is called a dividend. This is not a myth, and it's not a small amount. While it's never guaranteed because it depends on the company's performance, Amica has paid out a dividend to its auto policyholders every single year for over a century. Historically, that dividend payout has often been up to 20% of your annual premium. Let's put that into real numbers. Suppose your annual auto premium after all your discounts is $2,000. A 20% dividend means that at the end of the policy year, Amica sends you a check for $400. Not a credit on your next bill, not a coupon, check, or a direct deposit straight into your bank account. Cold hard cash. This fundamentally changes how you calculate the cost. That $2,000 policy effectively cost you $1,600. Now, go back and compare that to the quote from the company with the funny commercials. The gap has likely vanished, or even flipped in Amica's favor. The dividend isn't a marketing gimmick. It's a core feature of their business model. It's the ultimate reward for being part of a low-risk, responsible group of drivers. It aligns everyone's interests. As a policyholder owner, you want the company to be profitable. You're incentivized to drive safely because when the company has fewer claims to pay, the dividend for everyone, including you, is bigger. It transforms the typically adversarial relationship between you and your insurer into a partnership. So, when we take an honest look at the cost of Amica, we see a three-layered system. There's the initial quote, which can seem high. Then there's the discounted price, which becomes very competitive for responsible drivers who bundle. And finally, there's the true cost, after you subtract the dividend, which can make Amica one of the best long-term values in the entire industry for their target customer. It's a model that rewards stability, loyalty, and safety. So we've crunched the numbers and unlocked the secret of the dividend. But a cheap policy with a terrible claims process is the most expensive policy of all. What really happens when you pick up the phone after a crash? Does Amica's legendary service hold up under pressure? Or does it all fall apart when your money is on the line? That's where we're going next. The moment of truth for any insurance company isn't when you swipe your card to pay a premium. It's in the frantic, heart-pounding minutes after the crunch of metal and the shatter of glass. It's when you're standing on the side of a busy road, flashers blinking, trying to figure out what to do next. This is the test. This is where the marketing slogans and the friendly sales pitches either become a reality or evaporate into a frustrating nightmare. So let's walk through it. You've been in an accident. It's not your fault. A driver ran a red light and T-boned your passenger side. Everyone's okay, thankfully, but your car, your reliable daily driver, is a wreck. You've exchanged information, the police have come and gone, and now you're holding your phone. You pull up the Amica app or dial the 24/7 claims number. What happens now? According to an overwhelming majority of customer experiences and industry ratings, that first call is where Amica immediately starts to differentiate itself. You're not typically routed through an endless phone tree or put on hold for 45 minutes listening to terrible music. You get a real person, a claims specialist, who is trained to be calm, empathetic, and efficient. Their first question is usually, "Are you and everyone else safe?" It's a small thing, but it sets the tone. They're not just processing a number. They're talking to a person in a stressful situation. They'll walk you through the immediate next steps. What information they need from the other driver, the police report number, and where the car is being towed. They'll confirm your coverages right then and there. Do you have rental reimbursement? They'll explain how to get one set up, often with a direct link to a partner like Enterprise or Hertz, so the billing is handled seamlessly between the companies. The goal of this first interaction is to de-escalate your stress and establish a clear plan. By the time you hang up, you should have a claim number and the name of the specific claims adjuster who will be your single point of contact going forward. This is a critical piece of the puzzle. With many budget insurers, you might talk to a different person every time you call, re-explaining your situation over and over. Amica's model is built around that dedicated adjuster. Within a business day, sometimes even just a few hours, that person is supposed to call you to introduce themselves. Their job is to manage your entire claim, from appraisal to final payment. Now comes the first major decision point: assessing the damage. Amica gives you options. You can use their mobile app to take photos and submit a virtual claim, which is great for minor cosmetic damage. For more significant damage, like our T-bone scenario, they'll send an appraiser or, more commonly, direct you to one of their approved repair facilities. These are shops that are part of Amica's network. They have pre-negotiated labor rates and a direct line to Amica's system. The major benefit here is speed and convenience. You drop your car off, the shop writes the estimate, sends it to Amica for approval, and gets to work. Amica pays the shop directly, and you just pay your deductible. Plus, Amica guarantees the workmanship of these network shops for as long as you own the vehicle. But what if you have a mechanic you've trusted for 20 years? You don't have to use Amica's network. This is your right. You can take your car to any licensed repair facility you choose. The process is just a little different. Your mechanic will write up their estimate, and your Amica adjuster will need to review and approve it. This is where a little friction can sometimes occur. If your mechanic's labor rate is significantly higher than the going rate in your area, or if they want to use only original manufacturer parts when high-quality aftermarket parts are available, your adjuster might push back. They aren't required to pay for the most expensive possible repair. They're required to pay to restore your vehicle to its pre-accident condition. In most non-contentious cases, they'll work it out with your shop, but it can add a day or two to the process. Now let's talk about the nightmare scenario. Your adjuster calls with the bad news. The cost to repair your car exceeds its value. It's a total loss. This is, without a doubt, the single most contentious part of any auto insurance claim with any company. This is where friendships end and angry online reviews are born. So how does Amica handle it? They will calculate your vehicle's actual cash value, or ACV. This is not what you paid for it. It's not what you still owe on your loan. It's what your exact car, same year, make, model, trim, and condition, was worth in your local market the second before the crash. To do this, they use third-party valuation services that analyze real sales data from dealerships and private sales in your area. They'll compile a report showing you comparable vehicles that have recently sold. Your adjuster will present you with this report and a settlement offer, minus your deductible. Now here's the honest truth. That first offer might feel low. It almost always does. People are emotionally attached to their cars and often overestimate their value. But this is not necessarily a take it or leave it situation. This is where you need to do your own homework. If you can find legitimate evidence that your car was worth more, maybe it had brand new tires, a premium sound system you added, or was in exceptionally low mileage showroom condition, you can present that evidence to your adjuster. Look at local dealer listings and private sales sites for cars that are a true apples-to-apples comparison. If your evidence is solid, Amica has a reputation for being more willing than many competitors to negotiate in good faith and adjust the offer. They don't want a protracted, ugly fight. But if you just feel it's worth more without any data to back it up, you won't get very far. This is also where having gap insurance becomes critical. If the ACV offer is $15,000, but you still owe $18,000 on your car loan, you are responsible for that $3,000 difference. Amica, like all insurers, doesn't pay off your loan. They pay what the car was worth. Finally, let's connect this back to Amica's structure as a mutual company. Does filing a claim, especially a big one, kill your annual dividend? The official answer is no. Your dividend is calculated based on the company's overall financial performance for the year, not your individual claim's history. However, your claim's history absolutely affects your base premium at renewal time. An at-fault accident will almost certainly raise your rates. A not-at-fault accident, like the one we described, is less likely to cause a major spike but could still have a small impact or cause you to lose a claims-free discount. So while a claim doesn't directly touch your dividend check, it will definitely influence the total amount you pay to the company over the next few years. So, the verdict on the claims process: J.D. Power consistently ranks Amica at or near the very top of the industry for claims satisfaction. The process is designed to be personal, responsive, and relatively low friction. For the vast majority of standard repair claims, customers report an experience that feels premium and justifies the cost. For the more difficult total loss claims, they are fair and data-driven, but you still need to be your own advocate. The legendary service, for the most part, holds up under pressure. So, for the most part, the claims process lives up to the hype. But even a flawless claims experience can't overcome fundamental issues of cost, stringent underwriting, and limited availability. And that's the hard truth we need to face. Who is Amica actually wrong for? Who should steer clear, no matter how great the service is? First, let's talk about the most obvious group: the aggressively budget-conscious driver. This is the person whose number one, and perhaps only priority, is finding the absolute lowest premium possible. This isn't a judgment. For millions of Americans, every single dollar counts. If you're a student, just starting your career, or supporting a family on a tight budget, an extra $50 or $60 a month on car insurance isn't a minor inconvenience. It's the grocery bill. It's a utility payment. Amica, with its premium pricing structure, is almost never going to win a head-to-head price war against the high-volume, low-margin giants like GEICO or Progressive. Those companies have built their entire business model on digital efficiency and mass-market appeal, allowing them to shave down premiums to the bare minimum. Amica's model is different. It's built on service stability and that potential for a dividend payout. But here's the critical point about the dividend. It's not guaranteed, and it comes at the end of your policy term. You have to be able to afford the higher upfront premium for an entire year to potentially get a portion of it back. For the driver who needs to minimize their monthly cash outflow right now, that's a non-starter. It's like being told you can get a 20% rebate on a $500 jacket, but you still have to have the $500 in your wallet to buy it in the first place. If you only have $200, the rebate is irrelevant. For this driver, the value proposition just isn't there. The peace of mind that comes from knowing you have an extra $600 in your bank account over the course of a year can easily outweigh the promise of a potentially better claims experience you might never even need. Next, and this is a big one, is the driver with a, let's call it a colorful driving history. Amica is notoriously selective. Their underwriting process is one of the most stringent in the industry. Think of them as the Ivy League admissions office of insurance. They are building a community of low-risk members, because that's how their mutual model works best. Fewer claims means more money stays within the company to be returned to policyholders as dividends. So, if you have multiple at-fault accidents on your record, a DUI, or a collection of serious speeding tickets, you're likely going to get a swift rejection letter. They aren't equipped, nor are they interested, in pricing the kind of risk you represent. This isn't them being mean. It's just their business strategy. They are actively filtering for the safest drivers. So, if you fall into this higher risk category, trying to get a quote from Amica is often a waste of your time and can lead to frustration. You're simply not their target customer. And honestly, you wouldn't want them anyway, because even if they did accept you, the premium would likely be astronomical to compensate for the risk. Instead, you're far better off looking at companies that specialize in what's called non-standard insurance. Companies like the General or Safe Auto have built their entire infrastructure around insuring higher-risk drivers. They understand that market, they know how to price it competitively, and their processes are designed to get you covered. Trying to fit a square peg into a round hole with Amica will only lead to a denial, whereas going to a specialist will get you the coverage you legally need to be on the road. The third person who should steer clear is the driver who prioritizes speed and modern, tech-centric convenience above all else. This is the person who wants to get a quote, buy a policy, and have their digital ID card on their phone in under 10 minutes, all without ever speaking to a human. While Amica has an online presence and a mobile app, they are not a tech-first company. Their DNA is rooted in personal relationships and a more traditional, deliberative approach. Sometimes, getting a quote might involve a follow-up phone call. Finalizing a policy might take a little more back and forth than with a company that's fully automated. Furthermore, Amica has been much slower to adopt the kind of tech gimmicks that have become standard elsewhere. I'm talking about telematics and usage-based insurance programs, like Progressive Snapshot or State Farm's Drive Safe and Save, where a plug-in device or your phone's app monitors your driving habits to give you a personalized discount. For a safe driver who loves data and wants to be rewarded in real time for their good habits, these programs are a huge draw. Amica doesn't really play in that sandbox. Their approach is to reward you after the fact with a dividend, not to give you a 15% discount next month because you didn't heartbreak all week. If you want the latest app features, cutting-edge telematics, and an entirely digital lightning-fast experience, a newer, more tech-focused insurer like Root, Metromile, Or even the big players like Progressive will be a much better cultural fit. Amica might feel a bit like using a landline in a smartphone world for this type of consumer. Fourth, we have to talk about geography. This is a simple, unavoidable deal breaker for a huge number of Americans. Amica is not licensed to sell insurance in every state. Most notably, if you live in Alaska or Hawaii, you're out of luck. But it's more nuanced than that. Even in the states where they do operate, their physical presence can be incredibly limited. Unlike State Farm or Allstate, which seem to have an agent's office in every other small-town strip mall, Amica's brick-and-mortar locations are few and far between, typically concentrated in more populated suburban areas. Why does this matter? Well, if you're someone who values the ability to walk into an office, sit down face-to-face with an agent, and sort out a problem, Amica may not be a practical choice unless you happen to live near one of their few offices. For millions of people in rural America, the local agent is a pillar of the community, someone they know and trust. That hyperlocal, in-person service model is the bedrock of companies like Country Financial or your local farm bureau. Amica's model relies heavily on phone calls and online interactions. If you live in a state they don't serve, it's a non-issue. But even if you live in a state they do serve, but you're 200 miles from their nearest office and you prefer in-person service, Amica is functionally unavailable to you in the way you want to do business. Finally, Amica is likely the wrong choice for the driver with unique or complex coverage needs. This includes people who own heavily modified vehicles, classic or collector cars, or those who use their personal vehicle for significant business purposes, like ride-sharing or delivery. Amica's sweet spot is the standard, preferred driver with a standard car used for standard commuting and personal errands. Their underwriting and policy options are streamlined for this majority. When you start introducing complexity, their system can get rigid. A heavily modified sports car? That's a risk they may not be comfortable with. A vintage Mustang that needs an agreed value policy? You're far better off with a specialty insurer like Haggerty or Grundy, who live and breathe classic cars. Driving full-time for Uber or DoorDash? That requires a specific commercial or rideshare endorsement that Amica may not offer with the flexibility or competitive pricing of a company like Allstate or Progressive, who have leaned heavily into that market. Amica insures cars. They don't specialize in insuring a driver's unique automotive passion project or their side hustle. If your vehicle is more than just a tool to get from A to B, you owe it to yourself to find an insurer who understands and is built to protect your specific, non-standard situation. So we have the budget shoppers, the high-risk drivers, the tech-obsessed, the geographically excluded, and those with complex needs. That's a massive slice of the American driving public. It paints a clear picture that despite its sterling reputation, Amica is a niche product, not a one-size-fits-all solution. Which begs the ultimate question. After eliminating all of these groups, who is left? Who is the perfect, ideal customer for whom Amica isn't just a good option, but the best possible choice? The ideal Amica customer is what we could call the established protector. This isn't a 22-year-old looking for the cheapest possible coverage on a 10-year-old sedan. This is someone who has built something worth protecting, and they understand that the cheapest option is rarely the best. Let's paint a picture. The ideal Amica customer is likely a homeowner. That's almost non-negotiable. The value proposition of Amica skyrockets the moment you bundle home and auto insurance. They've built their entire discount structure around this loyalty. So our ideal customer doesn't just own a car. They own a home, and they want to protect both under one reliable roof. They have a good, maybe even excellent credit score. They've spent years, maybe decades, being financially responsible, and they expect to be rewarded for it, not penalized. They know that a high credit score is a sign of reliability, and Amica's underwriting process agrees, offering them some of the best rates available to this demographic. Their driving record is clean. Not just okay, but clean. No at-fault accidents in the last 5 years. No DUIs. No string of speeding tickets. They are a careful, defensive driver. They aren't a risk on the road, and they don't want to be in an insurance pool that subsidizes reckless drivers. They are paying for their own predictable, safe behavior. And here is the most important piece of the puzzle. The established protector values service and peace of mind above all else. They've likely had a bad experience with another insurer in the past. They've sat on hold for an hour, been passed between 7 different departments, or argued with an adjuster who was clearly incentivized to pay out as little as possible. They've lived that nightmare, and they have made a conscious decision to never go through it again. They are willing to pay 5, maybe even 10% more, For the certainty that when they call with a claim, a competent, empathetic human being will answer the phone and guide them through the process. They read the J.D. Power surveys. They see Amica at the top, year after year, and to them that isn't just a statistic, it's a promise. Finally, this person understands the concept of a mutual insurance company. This is key. They aren't just buying a product. They are becoming a policyholder in a company they technically co-own. This brings us to Amica's ace in the hole, the feature that truly separates them for this ideal customer: the dividend policy. Let's be crystal clear about this, because it's often misunderstood. An Amica dividend is not a guaranteed rebate. It's not a discount. It is a return of profit. Because Amica is owned by its policyholders, not by stockholders, it doesn't have to siphon off profits to Wall Street. When the company has a good year, meaning they took in more in premiums than they paid out in claims and operating expenses, they have a surplus. And instead of keeping it, they give a portion of it back to you, the owner policyholder. Typically, for a traditional auto policy, this dividend can be up to 20% of your annual premium. Let's put that in real numbers. If your annual premium is $2,000, a 20% dividend means you get a check for $400 back at the end of your policy term. Suddenly, that slightly higher premium doesn't seem so high anymore, does it? In many cases, after the dividend, Amica can actually become one of the most cost-effective options for this low-risk group. This dividend transforms the relationship. It's a tangible reward for your loyalty and for being part of a pool of other safe, responsible drivers. It aligns your interests with the company's. You both want the company to be run efficiently and to have a low number of claims. It's a powerful symbiotic relationship that you simply do not get with a standard, stockholder-owned insurance company. For the established protector, this isn't just a gimmick. It's the ultimate proof that they made the right choice. It's the company saying, "Thank you for being a great customer. Here's your share of our success." So after this deep 10-part dive, what is our final honest verdict on Amica? Amica is not the insurer for everyone, and it doesn't try to be. If you are a high-risk driver, if you're shopping purely on price, if you don't own a home, or if you need the immediate face-to-face service of a local agent's office on every corner, Amica is probably not your best fit. You will likely find their premiums uncompetitive and their underwriting standards too strict. But if you are that established protector, if you have a great driving record, good credit, and a home to bundle, and if you have reached a point in your life where you believe that true value lies not in the cheapest price tag, but in unparalleled service and the peace of mind that comes from knowing you're with the best, then Amica isn't just an option. It might be your perfect destination. It's an investment in tranquility. It's the decision to trade the potential chaos of a cut-rate claims process for the predictable excellence of a company that has built its entire century-long reputation on customer satisfaction. The premium you pay isn't just for collision and comprehensive coverage. It's for the absence of headaches. It's for the assurance that on the worst day of your driving life, your insurance company will be a partner in your recovery, not an obstacle to it. The question you have to ask yourself is not, "Can I find cheaper insurance?" Because the answer for many people will be yes. The real question is, how much is my peace of mind worth? How much would you pay to know that your claim will be handled fairly, efficiently, and with compassion? If you see yourself in the description of the ideal Amica customer, then getting a quote is the next logical step. Not just to compare prices, but to see if you qualify for membership in this more exclusive club. Go through their online process or give them a call. Be honest about your driving history and your needs. See what they offer. The price might be higher than GEICO or Progressive. It might even be a little lower. But remember what you're buying. You're not just comparing numbers on a screen, you're comparing philosophies. You're comparing the frantic, price-driven world of mass-market insurance with the quiet, confident stability of a company that prioritizes its policyholders above all else. The choice is about more than just your car. It's about what kind of company you want to do business with. It's about what kind of service you believe you deserve. For the right person, choosing Amica is less of a purchase and more of a declaration that you're done with the games. You're done with the hold music. You're done with being just another policy number. You're ready for an insurance partner. And in the chaotic world of auto insurance, finding a true partner is perhaps the most valuable coverage of all.